Us. Welcome back, everyone. A new day, new opportunities, and the markets are going to open today. So I want everyone to be ready. So we're going to continue with this series of coaching, just basic tools, day-to-day tools. They might look simple, but you have no idea. Once you master them, you will conquer so many opportunities that will return, even if you're for your 401k, if you're in the United States, or you're outside the US. It may come as a nice extra income, and it may come to be a way for you to build up your investment. Hey, one of the strategies of talking to the richest man in India, they're telling them, buy US stocks. That's what you have to do. So, hey, who are we to go against the trend? That's what it is. So today I'm going to talk about Cameco. Cameco's trend Fibonacci and price rotation levels. Okay, we're going to come with two targets for you to have an idea where you're going to be. If you just want to buy shares, excellent. But if you want to see how I do it for our community, the Profit Flow Group community, that's right, PFG, then you absolutely have to go to the description of this video, click on the link. It's a free broadcast. It's free. It's not going to bite you. All right, just click on that link and watch exactly what I do, how I do, and why I do it, right? So let's start with Cameco. Now, this company, you may think it's gone, and for a while it was, because there was a little bit of accidents in Japan. Not an accident, it was very terrible. It was a very terrible thing that happened back in the days in Japan, in Fukushima. But now look at what it is. Cameco is one of the largest global providers of the fuel needed to energize a clean air world. That's what it is. Like it or not, nuclear power, nuclear energy is one of the cleanest ways of energy. That's right, it is what it is. But today I'm not going to debate that. I'm just going to go to the charts and work with my TradingView application and guide you to see exactly where we are. So we came from a full decline of about 10 years. That's a full decline from the peak back in February 2011 when this security was trading at $44.60. That's what it is. But before that, it reached a peak of 55. I'm telling you, in the next 10 years, we're going to just go back to this peak 55. Now, how are we going to do that step by step? There's massive volume using my Hawkeye Traders tools. I can see in conjunction with all the volume tools that I have. There's massive volume coming in when it was at $10. That was back in December. Not too long ago. That's just 9 months ago. It was $10. Now it's double, $21.59. That's 100% for you in less than a month. Sorry, in less than 9 months. That's less than a year. So every time that you listen to some of my colleagues, trying to induce fear in your veins, hey, listen, the stock market, it's a place where you always have to play defense. If you're buying shares, just set your stop loss. Just set a stop loss and you will protecting your capital. There's no such a thing that you have to lose a shirt in the stock market. You lose a shirt in the stock market if you're over leveraged. So let's don't get confused in what we're doing here, okay? We're investing. We have to assume some risk. Even if you buy Hershey, even if you're buying American Express, you're always going to take some risk. So we all adults, and if you're 20 or 18 years old, I think you may not be able to drink, buy alcohol, but you're welcome. Thanks to Fidelity, you're welcome right away. Not only to Fidelity, but many brokers are welcome to join the game, join the business of the stock market. And thanks to Fidelity, now with your parents' approval, at 17, you can have your own trading account. Some limitations on capital, but we all have to start somewhere, right? Aren't we? All right, so look at this. Massive volume coming in. There's no doubts about it. Then again, we have massive volume at $12.43. And a big push at this level that take us to $19.62. So easily to see, I'm just going to draw it for you to follow me. Here we go. There you go. And there you go. Exactly. So push, bullish leg, actually more like a recovery. Then you have the pullback. This is where you buy. Absolutely, that's a trend Fibonacci right there. Same, we have a second structure. Pullback, this is your opportunity to buy. That was your opportunity to buy. However, if you're looking for a third opportunity to join, then what you want to do, you want to buy the breakout. This is where things are going to get heated, and we're targeting $30 per share. Right now, you're buying at $20. Still, it's not going to be 100% from this point, but a very strong and decent 50% plus more or less 50% return in a security that is bullish. You can say whatever you want about a nuclear energy. It's very clean. It's not like coal, like Peabody, ticker BTU. So you have an opportunity to do that. Now let's go on the different tools. Let's start with Fibonacci trend, trend Fibonacci. There you go. First time. The small one goes all the way deep into the 38.2% and the 50%. So you take that from the 38. Use your price range. This on the left, the tools. You measure the range. That gives you figure and expansion. Figure and expansion. So that's $7. 7 points. Let's be just follow where it slowed down. You add $7. There you go. And if you were to buy the pullback, let's say you buy specifically, you have a good timing, and you do that from $9.18. You actually take home about 80% of your money in 1, 2, 3, 4, 5 in 5 months. Not a bad return. Absolutely not a bad return following this tool, trend Fibonacci. Now that's the first Fibonacci. Let's go to the second one because there are 3 here. There are 3. Well, it's actually 2. Let's go to the second one. You add it from the pullback, not from this one. This is the pullback. This is your last base before it develops a bullish leg. Put that in, add it, and see how it dips. Or go all the way. 1, 2, 3, sort of 3 months. It's defending, not breaking under $15.50. That's the mid-level. So we're going to use, again, 38.2% Fibonacci, all the way from $16.90. Take price range, measure the range. Now you have $13.29. You have 13 points. And all you have to do, look at what I do. From this level, not from the 50, from this level, we're going to be a little bit more aggressive with our projection on this one. And $13, just call it 14 right there. It will take you to $31.11. So I'm not in this video just to guide you. I'm just to train you. You always have to measure risk. This is not, remember that video I posted 2 months ago? No, we have to be better. So what we're going to do, we're going to talk about risk. Now remember, I'm not your financial advisor. I'm not your broker. I'm just providing this information for education. But besides being informative, let's make it compelling. Let's talk about risk because you're investing. That's what you want to do. So if you buy at this point, you have to be a grown-up and you need to know your risk. So I will say at least I will put my risk at the 38.2% from the Fibonacci figure. All right? That's about 22%. That means for every $1,000 that you're investing, you're risking only $220 plus commissions. That depends on your broker. If you're working with Interactive Brokers, Robinhood, Schwab's, God knows. We go all the way up. That probability indicates a 43% on the table for you. Risk-reward ratio, it's not super exciting, but still, it does make money. All right, that's a dollar risk for actually to take very close to $2. Not a bad thing. Not bad at all. So now we have the trend Fibonacci. This is just what we have. The first stop will be for us $31. All right, that's $31 per share. And now I'm going to delete this and I'm going to walk you through price rotation. So what is the key level to bid in this range? It's March 2014 when the stock was trading at $25.84. So what I did, I can use it for this level, but I think I want the big level because we sort of have like very close also from February 2012. So this is the reality, what it has to do, what Cameco, ticker CCJ, has to do to rotate with a lot of energy. There's strong volume here, way more volume than in the last at least 5 years. I'm going to take the trend line and just draw a trend line and have this level as my level to break. That's my wall. That's my wall that I need to break. And as soon as I break that wall, great things are going to happen, not only for you, but for the company as well. That means that there's a demand, there's something that is happening that allow it to break this level. Remember, we're going to take February 2012. That's our level to bid. And I mean, we can take the lower part, but what we want to do is a full projection. So now I take the full range. What I have seen, the lowest low from all the way from, since 2012. And now That's about $5. Take again price range and measure it. You're going to have two figures. The dollar figure, that's $21 at 21 points, and the percentage, the expansion, that will give you two targets. First, let's go with the conservative view on this price rotation. We take this, and that will be $20. I have 22. That takes us to $48.96. That's conservative. That may happen in the next 3 years. Oh, but I want money overnight like AMC. I just want to run my account from $50,000 to $3 million. I get you. I will talk about that too. That's what we do at the Profit Flow Group. Remember, there's a link on this, on the description of this video. There's a link. All right, go there. And if you want to know how I do those calculations, how I use SDFs, statistical disruptive flows, to achieve 10x in less than 24 hours, then this service is for you. Now, let's continue. For those of you that you know you don't want to take much risk, and this sounds like something that you want to approach, then 83% in the next 3 years, it won't be bad for you. Something that you're definitely going to like. Now, let's continue and move to the big projection, the expansion. Now, you think, oh, wow, this is not going to happen, but you don't know the excessive liquidity that we have. That means that we're going to go back to the main level, all the way back to May 2007. It should not be you should not be surprised if that happens. But after that, if we expand just half of what we did before, then we're looking at a solid $80 stock. That means we're going to break the previous level. We're going to target 55, and after that, we have a little bit more to squeeze from this orange all the way to $81. Conservative speaking, my risk, the way I like to have this, the first one, I will take at least a 30% risk on this second target. That will take me to 132. This is where the risk-reward ratio gets way better, 1 to 4. Now, it's not going to happen overnight. I cannot promise you it will happen overnight, but I will say this. If you position yourself, if you structure your plan, your trading and investment plan, because this is not just an investment, it could be a trading opportunity that will yield, based on trend Fibonacci, at least 43%. That's doable. That's decent. And if we move all the way, that will on price rotation, then you get this level. Now, the second level, the big, I will say, why not? 8-10-year target on this one, still very humble. Same story. I will take the same risk, 32%, 30% risk, and I will go for 284% of my money. That means that every $1,000 with time has the potential to be turned into $2,800. A lot of people are looking for the big bazooka, the big superstar, the big to the moon story. They just come once in a while. There are a few more this time, but I'm also looking to provide this kind of analysis and ideas that will definitely have the potential to grow your account, grow your trading account, grow your investment account, and absolutely guide you into a better retirement period. As usual, if you like what you're seeing, hey, I don't want you to smash the like button. I don't really need you to subscribe. What I want you to do is to go to the description of this video. And if you want to learn more about my trading style, how I came up with all these brilliant ideas that guide me into these opportunities, but not only that, how I structure my options trading, that's where I squeeze the best. Because if I'm looking to make 43, how do I make 100%? How do I make 200% in a very short period of time? Then I use one of the most important tools ever created for investors and traders, options. Options on US stocks. That's what we do. So I thank you for watching. I will keep coming with more of these videos. My goal is to have these videos on a daily basis. Let's see how it goes with my publisher. But remember, there's a description on this, and the description of this video, there's a link. You can click on it and see more about what I do. You can see how I look. If you want to know how I look, you can see that, and definitely we can work together and you can join our community. But it's not only to make 100%. With the right options, we have the potential to double and triple that return. All right. Thank you so much for watching. Remember, today the stock market is open. Don't miss an opportunity. Okay. Ciao, ciao.